Vishy, you were the one earlier this year, late last year, that really started to pitch the idea of going out on the curve a little more. And if you're an investor both in the short term and the long term at this point, you felt that whiplash. So what is the recommendation today?
I think our recommendation is that over the course of the rest of this year, we will see the upside surprises we've gotten in inflation data begin to reverse. And we think that inflation will be steadily decrease over the rest of the year. There are multiple reasons for that. We think shelter we'll start seeing shelter inflation coming down. There's a good case to be made that between now and end of the year, we'll see this deceleration happen. And along with this deceleration, we think that the Fed it will be data driven, and the market will begin to interpret more Fed cuts coming, not on hold forever. We continue to think there'll be 3 cuts coming this year. So starting in September. So we have 3 cuts penciled in for this year. Certainly the market and the Fed needs more data, but we do expect that data will show deceleration, notable deceleration in the pace of inflation. That will be the signal for the Fed to begin to move towards normalizing policy.
Noelle, what's the move here for you? With a 2-year getting closer to 5%, where is the buying opportunity?
Yeah, this will be fun because we actually have a little bit different view than Vishay. So our base case is for growth to be a little bit higher than consensus, and that's largely underpinned by the consumer. Of course, there's risks there that we have to watch. Inflation will be boring, so we do expect it to continue to come down and the Fed to grow confident. And then policy, we think, is largely priced in. So the Fed's going to go 1 or 2 times. That's largely priced. So where does that leave us? That leaves us growth as the main driver. We could see continued volatility in rates, especially throughout the summer. We're likely to see the curve steepen a little bit and long end move up higher.
I'm glad you talked about that curve steepener because that's also been a very, very popular trade. Vishy, when do you start getting significant returns from that steepening play?
I think over the course of next, say, we don't think that we're that different from Noelle. It's the two cuts or 3 cuts. Our view is 3 cuts, but I think there's a good case for that. But I wouldn't be shocked if it ends up being 2 cuts. I do think that we will see over the course of the next 6 to 12 months, we will see the steepener actually beginning to work. So we think that there are better ways of expressing that underlying duration long through than just outright steepeners. It's a very crowded trade, but I do think that if we look ahead, in second quarter of 2025, our expectation is 2-year would be at 360, and the 10-year would be at 375. So we would begin to, inversion that we see now, we expect it to go away over the course of next 12 months.